Good evening. I'm Epstein, and here we are with your weekend edition of your Spider ETF stock market wrap-up for Sunday evening, and this is the 2nd of March, 2025. Now, what a weekend this has been. It began Friday, as you know, with President Zelensky being basically invited out of the White House, no deal signed on minerals. He fell into the trap of a politician trying to make a point at an event that the president was holding that he probably didn't even want to hold in the first place. That's my opinion. And it just blew the whole thing up. On the positive side for President Trump, he's now saying Europe is running to increase their budgets for defense, and that was one of his goals. He's getting that. But at what cost? Are we a good ally? I don't know that we are. I mean, if you look at our borders, Mexico's not in love with us right now from what we're doing. Canada. Europe can't be at this point. Ukraine's got to just say, please help me, because the president is right. Without the U.S., there is no chance they can last that war with Russia. Just not going to happen no matter what Europe says. Number 3 or 4 in this scheme of events, suddenly, because of Zelensky, instead of Trump meeting one-on-one with Putin, now he's going to get an idea of what Europe wants. He wasn't asking what Europe wanted or Ukraine. I'm not saying that's right. I am just saying that isn't what he wanted, and now that's changed. And at some point, you don't live in an isolationist world. You've got to be part of the world. This is a mess right now, and I think you realize that. Why the stock market rallied back as big as it did on Friday is beyond me, other than short covering. I know in the futures tonight we're down. We'll see if that can last or not. Let's talk for a minute of what you have in data coming up at you here. What you're going to get in the morning is the S&P Global Group coming out with their final manufacturing PMI number for February at 845. The ISM will come out with their U.S. February manufacturing sector index at 9. You get construction spending data for January. That's going to come out at 9. You got crypto news coming out. We talked about that. Maybe we didn't. Today, out of left field, the president decides and signs an order that he wants a study done on the U.S. buying cryptocurrencies for strategic reserves. Okay, so you were down 11% last week in the Bitcoin. You're up today, nearly 13 tonight. Just give you an idea of the swings. Europe held the emergency summit. They're putting together something to give the president. And will the tariffs hit Mexico and Canada? Will they be moderated? What's going to happen? This is the first set. Then we have another set on the 12th. Then in April, the very beginning, Lutnick, our Secretary of Commerce, has to deliver a paper for the reciprocal tariffs. The one tariff I know is going to go ahead is the one on China. The president has no grounds to back off. Does he have enough grounds on Mexico to back off? I'm thinking he does. I don't know about Canada. And the reason I mention Canada is today the president again ordered a study on lumber coming into the United States from Canada. He thinks we're being taken advantage of. He did this again today. So I would say Canada's got a problem with the U.S., and we will see where that all goes. So let's go to the chart action and see what we have. The stock indices tonight are down. Gold is up about $30. You're up about 12% in the Bitcoin market. And there's chaos in Europe about where things go and what they do. I'm sticking with PANW because I was on vacation, as you know, the whole week, and I might as well get a week where I finish it up. The market on a weekly chart has had this beautiful rise to the upside in the pattern of higher lows, higher highs. The support for the market is right here. On a weekly chart, I think the pros are buying it here with stops if the market gets about $10 lower under 180.12. If the market goes up from here, they'll probably come into the market right through here. Now, what could stop that is if the market were to take out this week's highs, which were 193.40 first, and then reverse under this week's lows of 184.65, I don't think it would matter here. I think the pros would then bail on the way down. So there's two things that I'm looking at to see how the market's going to hold up. Momentum-wise, we are flat as can be in the market. In Dutch Brothers, are we on the verge of a correction? You have an 80 reading on the slow stochastic. The market finished the week up where? If you look at where it finished on the week, near the high point. So what the market's doing is it's still holding on. You'd have to get this number to close under 79 for me to get concerned that the trend is up. I'm not seeing that, but you're so close to the upper Bollinger Band, I see resistance because markets typically don't stay over bands more than 5% of the time or under them. When you look at Netflix, I have been looking for a pullback, and this is what I wanted to see. So the market has lost its bullish reading. It's got a reading of 75. This is the first time it's lost it, and I will take you there. You could see prior week it was up, and it's been up for that. So unless it gains it back this week with a pretty dramatic rally to the upside, I can make an argument that price and the 18-week average, which will rise from here, the market, give you an idea. While it's 912 right now, the week before it was 899, and the week before that 886. So on average, it's going up about $12. So I can make an argument between 9 and 905. If it starts dropping, it might come there for further support. That'd be a pretty big number off the recent high. When we come to China, you're running the upper Bollinger Band backed under it, which is still a bullish momentum. As you can see, you've latched onto that band and you're overbought. I don't see anything here that would say, to me at least, hey, I think you have to run out and buy this at this point. If anything, be a bit cautious. You're up at a big resistance point. And China's model to get out of this financial fiasco that they're in is to export their way out of it. The Trump part is to stop those exports coming in. The only way that China gets out of this is eating the tariffs that the U.S. and other countries do and just absorbing them so that as they sell goods, they're still priced about the same. That isn't the way to come out of this financial situation. Home Depot finally made its run this week to the lower Bollinger Band and bounced. We may have seen the worst in the market. I am not in the buy mode here. The market has to get through 405.74 and actually through 418 on the current pattern to be anything but still in a bearish mode. But you've got to pay attention that the market paid good attention to the lower band and bounced nicely. On Uber, I still believe the market on pullbacks into the 18-week average looks good and interesting from the long side. On regional banking, the trend is turned down. Expect to see aggressive selling at 63.28. If you got back over 64.97, you probably negate the idea of being bearish. In XLI, the bear camp is alive and well. I think they'll be looking at 137.46 from the bear camp, saying if you get over 139.08, no, I don't think it's time to be short anymore. But barring that, the door's open for the lower Bollinger Band. On the energy sector, you're in no man's land. You keep just hanging at this 18-week average of closes in red, not staying up or down. It's just back and forth. Very difficult. Is the dollar bullish or bearish because of this, all that's going on between the tariffs, Ukraine at this point in time? I don't know. I've read stories through the weekend in depth about bull side and bear side on this. I understand both arguments, and I think you're sort of in no man's land. But as a chartist, here's what I'd say. Take the name off. You're oversold, which keeps me away from wanting the short side. Either embed and I get more bearish, or correct the oversold condition. If the market gets to 29.66, about only 27 cents higher, it's into the resistance, but over 29.78, you negate the downtrend. In GLD, you finally got a big drop in the market. Now, you broke hard on Friday. Gold futures tonight have made up almost 80% of that drop from Friday. So it's a hard one. The overall trend is up. The big support's 251.25. The market's 263.27. I see nothing on this chart right now screaming, come in and get me on a weekly basis. You're overbought. In the copper market, are the tariffs going to be put on copper come early April? Nobody seems to know. The bigger question is steel and aluminum tariffs. Are they going to hit right away, followed by another set of tariffs on Mexico, Canada, and China, and then the rest of the world, the reciprocal tariffs? It's difficult to want to own copper here. Copper traders, I'm talking the big trading firms, are trying to send as much copper as they can to America before potential tariffs can hit. So you put it all together, you get an interesting play that you try to figure out what do you do with from there, and that's where we're at. So one of the things that we do is we cover our newsletters, special reports, my own letters, everything we've got via our free offers to get you to see what we offer trading clients with us. Just go to iraepstein.com, free offers. There'll be a cursor at the top here. Give that a click and away you go. I'm Ira. I'll catch up with everybody first thing in the morning. Have a great evening.